sticking with Ghana, where the headline inflation for the month of July came in at a roaring 31.7% yesterday, after the inflation level topped 26% in the month of June. Also yesterday, Fitch Ratings followed Standard & Poor's to downgrade Ghana's credit rating into a further junk territory as the West African gold producer grapples with a weak local currency and a difficult fiscal balance. Bringing me to speed on all of these latest macro and market developments is Fred Duval, a licensed dealer and CEO at Apakan Securities based in Accra. Akwaba, and a good evening to you. Fred, let's break into the latest numbers. Thank you, my friend, for making the time. Where are the pressure points for you in this particular inflation data?
Ghana's headline inflation, as you have seen throughout this year, has been on a steady rise and is currently at 31.7%, as you rightly said, for the month of July. This is actually the highest inflation print that we've seen since November 2003. And last month's inflation was primarily driven by the non-food portion of the basket, where we had transport, housing, and utilities all increasing by almost 45%. The food portion of the basket also increased by about 32%. The steep depreciation of the cedi to the US dollar has been a major catalyst to the current high inflationary environment. And as the data shows, imported inflation has outstripped local inflation for 4 consecutive months. And with the cedi continuing to depreciate, we are likely to see this trend continue.
Is inflation out of control of the authorities right now, Fred, or this is just simply a momentary issue?
Currently it looks as though inflation is spiraling out of control. However, if there are any positives in this, if there's a silver lining in this dark cloud of inflation, then it's the fact that the rate of change in CPI levels on a month-on-month basis has been decelerating since May. So essentially, really, the month-on-month inflation has been on a downward trend. And if that should continue, then it is only a matter of time before we see headline inflation, which is a year-on-year measure, trend downwards.
So what is the expected impact of roughly 32% inflation on financial assets? You're a marketplace person, you're a licensed dealer, you're the CEO of a securities trading firm. What's the word on the streets across the city house and elsewhere as to what inflation, how much damage this will do to financial assets and portfolios?
Well, the first thing is that we expect that investors will be demanding more returns on their investments with where inflation is now. Real interest rates are in the negative region. Inflation is outperforming all the yields on treasury bills, which is in the 29% region. So we expect that treasury bills and short-term government securities and fixed income securities will breach the 30% mark in the coming weeks. In the bond market, that 30% mark has already even been breached. So we expect that there's going to be a lot of demand for high yields on fixed income assets. In terms of equities, nobody seems to want to touch equities in this moment, since there's been, because of the significantly high returns on fixed income assets, and also the equity market is returning a negative 11% as we speak.
So that brings me to inflation, to interest rate, I'm sure. How does this higher inflation play into interest rate, and what to expect at the credit market for individuals who want to borrow or for corporates?
This will definitely translate into higher interest and borrowing costs for both individuals and corporates. The Ghana reference rate, which is the central bank's benchmark rate that is set for commercial banks to guide their rates for lending, has been on the rise since the beginning of the year. It opened the year at around 13.9% and is currently at 24.2%. So when you slap on the risk premium for either the corporate or the individual, then you're looking at lending rates or borrowing rates crossing the 30% mark. We expect that the MPC would react to this current inflationary level in its meeting in September, which should contribute to inching up of the reference rate. So it's only going to get worse for borrowing, cost of borrowing.
It's really going to look at very because I'm looking at Ghana's sovereign, the yield on some of your sovereign instruments. I'm looking at north of double digits of about 26.8% for Ghana's 2027 Eurobond. The lowest I'm looking at here is about 18.63% for Ghana's 2035 Eurobond. So even at the global marketplace, you think it's going to be very tough for the authorities in Accra to be able to approach the global debt market, at least in the in the near term.
Yeah, I mean, it's going to be impossible. If you say tough, you're being generous. It's really impossible for the government to go into the international capital market to borrow. And now with the downgrade, we're seeing people all further dumping Ghana paper. So the yields on our Eurobonds are going to keep going up. And until something drastic changes, the government, in my opinion, will not have access to the market for the next 2 to 3 years at the barest minimum.
How tough are things getting for Ghana as a sovereign? Fitch Ratings cut Ghana's credit figure into negative further junk territory earlier this week. That followed Standard & Poor's earlier. What does this mean for the city and the ongoing talks between Accra and the IMF as to another line of fund facility from Washington?
Well, I mean, this is definitely not good news. With these further downgrades, we see that foreign investors who hold CD-denominated assets are fast exiting their positions and repatriating the proceeds to safer markets. What that means is that they're demanding a lot of US dollars to send these funds out of the country, which is putting a lot of pressure on the city. And we're currently looking at the city trading at about 9.1 cedis to the dollar. We began the month at around 8.1 cedis to the dollar. So the city is fast depreciating because you have a lot of foreign investors exiting their positions in city-denominated assets. That makes the city the worst performing currency in Africa, which is nothing to write home about. At this rate, the risk of IMF looking into or having conversations around debt restructuring as part of their program negotiations is something that is not too far off, and it may be on the table as part of the negotiations.
Interesting where we are right now. I'm going to bring it all the way down from the market, the sovereign, and what happens to financial assets, stocks, bonds, and all of that into the streets of Accra and Kumasi, Cape Coast, and elsewhere. Tell me, how are Kenyans coping with this high level of inflation, officially 31.7%? Do you think for the man on the streets, the figure could be much higher in terms of the reality real on the ground when folks need to purchase food, common commodities, items for kids, for children, for women, and day-to-day cost of transportation?
Yeah, I mean, definitely. I mean, you hear it all the time that people say that the inflation number that is being reported is significantly lower than what the actual market prices reflect. And it's tough times for the average Ghanaian. With the cedi depreciating, Ghana is a very import-dependent country. So with the cedi depreciating, it's only adding to the cost of items or cost of goods on the market. Cost of transportation hasn't been any lower. Crude prices have been up. And because we import a lot of refined petroleum, we've seen that the depreciating cedi, high crude prices is contributing to high ex-pump prices. So cost of transportation has gone up, cost of food, cost of housing, cost of utilities. We actually expect the PURC to increase utility tariffs in the coming months. So things are not looking very good for the average Ghanaian, and I think it's everybody needs to tighten their belt even more because it may get worse before it gets better.
Okay, we wish everyone the best over there in Ghana. Inflation's trending everywhere, even here in Nigeria. It's not looking any good as we speak because of a number of factors. Thank you so much for those insights on the latest Ghana's inflation and credit rating. Thank you so much, Fred Duval, the CEO at Apakan Securities.